I'm Ian Spreadbury. I started work as a pensions actuary. I joined Fidelity over 20 years ago and I've been managing bond funds for over 30 years. Looking at the investment outlook for 2018, my broader macro thesis is very much unchanged, that we are very much in a slow growth, low inflation environment. There are some very key structural factors bearing down on the global economy. First, a very high level of debt. And secondly, demographics, so aging populations. Both of these factors are acting as headwinds to growth, and that is likely to continue. Now, that slow growth, low inflation means that bond yields will probably stay low. So I think government bond yields are likely to stay in current ranges, so very close to current levels. Corporate bonds have performed very, very well indeed, and I think that may continue, but certainly corporate bond valuations are now looking stretched in some areas, particularly high yield. Looking at what might surprise investors in 2018, firstly, politics. It was a busy agenda in 2017 with elections in France, the UK and Germany, and none of that really fazed markets. And looking forward to 2018, it's a less busy agenda. We do have elections in Italy, for example. We think it's unlikely that the five-star movement, the ultra-right, would be able to get into power. In the UK, you could argue that the political situation is quite fragile, with an outside possibility of a Labour government. And if that were to happen, and it's definitely not our expectation, that would be relatively negative for markets and certainly gilts, I think, in the short to medium term. Looking at how we're planning to add value for investors going forward, we are in a very low yield environment and corporate bond yields are also very low. I think that now is the time not to chase yield, but to focus more on stock selection. Credit quality at the margin is deteriorating, and it's important that we do the due diligence and make sure that we're in the right companies. With regard to interest rate risk, again, government bond yields are historically very, very low. And I'm running duration or interest rate risk at a slightly lower level than our benchmarks generally.